David didn't lose his job, he didn't lose his income, he didn't make a bad financial decision, and yet, in just 4 days, he lost the ability to ever afford a home. Same salary, same savings, same house. The only thing that changed was a decision made by the Federal Reserve on a Tuesday morning. Most people think rising interest rates just make homes a little more expensive. That's not what's happening. What's actually happening is the Federal Reserve is quietly deciding who gets to own a home in America and who gets locked out forever. And right now, millions of people don't even realize they've already been priced out. Not temporarily priced out, permanently. Mortgage rates have gone from 3% in 2021 to over 7% today. That single change turned a $1,700 monthly payment into $2,990. Same house, $2,000 more every single month. My name is Alex. I track exactly what the Federal Reserve does and what it costs ordinary Americans. Today, exactly what happened, why it happened, and what people like David can actually do right now. If you're thinking about buying a home in 2026, this is the most important video you'll watch this year. David, $78,000 salary, $45,000 saved for down payment, pre-approved, January 2026, completely priced out by April. Lisa, 35, $74,000 salary, $38,000 saved, bought her home in 2021. Monthly payment, $1,680. David makes more money than Lisa. Lisa pays $1,220 less per month on the same size home, same city, same income level. 3-year difference. That 3-year gap cost David everything. Here's exactly what the Federal Reserve did. In 2021, mortgage rates were at historic lows, to 9%. Fed kept rates low during COVID, then inflation exploded. So the Fed did what it always does, raised rates aggressively. 2021, 2, 9%, 2022, 5, 1% 2022, 5.1% 23, 6.8% 2024, 7.1, 1% 2026, 7 small in the news. 0.25% here, 0.5% there. But here's what those small numbers did to real people. $380,000 home, 20% down, $344,000 loan. At 2.9% monthly payment, $1,275. At 3% monthly payment, $25.676. V% monthly payment, $2.76. It's $48.076. 811000. David's salary didn't increase by $9,732. Nobody's did. The Fed raised rates to fight inflation and accidentally made homeownership mathematically impossible for an entire generation. Lisa bought at $2,998 per month, locked in $1,680 per month. Forever, David waited. Now he faces $2,076 for the same house, if he can even qualify. Here's what nobody talks about. It's not just the payment that changed. The qualification rules changed too. To qualify for a $380,000 home at 3% today, minimum in income, $95,000. Minimum credit score, 720. Minimum down payment, $76,000. David earns $78,000. David earns $78,000. Needed $95,000. He saved $45,000, needed $76,000, rejected. Not because he's irresponsible, not because he's broke, because the Federal Reserve moved a number on a spreadsheet. Lisa's qualification in 2021, income needed, $58,000. Down payment needed, $28,000. She earned $74,000, had $38,000 saved, approved in 3 days. Same bank, same type of home. Completely different world. And if you think this doesn't affect you because you're not buying right now, that's exactly what David thought. Until 1 week later, when his rent went up. Because when fewer people can buy homes, more people are forced to rent. And when rental demand explodes, so do prices. This affects everyone. Buyers, renters, everyone. Here's the part that should genuinely concern you. Most people think this is temporary. The Fed will cut rates. Things go back to normal. Just wait it out. Here's why that thinking is dangerous. Federal Reserve economists have stated publicly, rates above 6% could remain through 2027. Even if they drop, they won't drop to 3%. Goldman Sachs projects long-term mortgage rates settling between 5.5% and 6.5%. The era of 3% mortgage rates is officially over. And while David waits, home prices are not dropping. Federal Reserve data shows home prices up 4.2% 2024, home prices up 3.8% 2025, projected up 3.1% 2026. The house that cost $380,000 when David first looked, $421,000 today. Waiting made everything worse, not better. Here is what I want you to understand. This situation is not fair. But it is fixable, not by waiting for the Fed to change. Fixable by changing your strategy completely. The people buying homes in 2026, despite 7% rates, they're not richer than you. They just changed their approach. 4 specific things they're doing differently. Step 1. Stop waiting. Start qualifying. Calculate exactly what income and down payment you need at today's rates. Not 2021 rates, not future rates. Today. Set that as your real target. Work backward from there. Waiting for rates to drop is not a strategy. It is a hope. Step 2. Attack your income gap. David needs $95,000. He earns $78,000. That $17,000 gap is his only real problem. Side income, promotion, career switch, skills upgrade. $17,000 income increase equals homeownership unlocked. More controllable than Federal Reserve policy. Step 3. Use the rate buy-down strategy. Most people don't know this exists. Pay points up front. Reduce your mortgage rate permanently. On a $304,000 loan, paying $6,080 up front reduces rate from 7.20% to 6.20%, saves $220 per month, $2,640 per year, $9,200 over 30 years, $6,000 today saves $9,000 tomorrow. Step 4. Find assumable mortgages. This is the biggest secret in real estate right now. Some existing homeowners have mortgages at 2.9% and 3.2% that are assumable, meaning you take over their mortgage at their old rate. Over 12 million assumable mortgages exist in America right now. Most buyers don't know to ask. Ask specifically for assumable mortgage listing. This single question changes everything. Remember David, pre-approved in January, priced out by April, felt like the dream was permanently over. David didn't wait for the Federal Reserve to save him. He closed the income gap, found an assumable mortgage, bought at 3.8%, not 7.0, 3%, monthly payment, $1,822, not perfect, but $256 less than the rate trap would have cost him. Not because he got lucky, because he stopped waiting for the system to fix itself and fixed his strategy instead. The Federal Reserve didn't take your chance at homeownership, but it did change the rules of the game. And in this new game, the people who win won't be the ones. They'll be the ones who adapt first. You know what changed. You know what to ask for. You know exactly what to do this week. Most people watching the news right now feel completely helpless about this. You just stopped being one of them. Subscribe. Next week, I'm showing you exactly how to find assumable mortgages in your city. The ones most agents will never show you. See you there.